Hi there, everybody. It's Alex here again for another vodcast with Property Insight. I'm the host today, and once again, I am joined by two very, very special guests. Matteo Donna, which is another property expert, and also David Walsh, which is a mortgage advisor, and he's got his own business. So, guys, how are you doing today anyway?
Oh, good, thanks. How are you doing?
Very well, yeah.
Good stuff, good stuff. So what I'm going to do, guys, is I'm just going to sort of introduce myself so everyone knows who I am, and then I'll introduce you guys, and then you just speak about yourself a little bit, and then we can start with the vodcast. So, guys, I am Alex from Alex and Matteo Estate Agents. I am an owner of a company. I've been an owner of a company for around about a year and a bit now. And we are actually smashing it, which I'm really, really happy about. And the best part is I think I might even have a sales offer today as well. So it's looking like it's going to be a very, very, very positive day for everybody, and also for us too at Alex and Matteo Estate Agents. But without further ado, David Walsh, how are we, sir?
Very good, thank you. Very good.
Good stuff, buddy. Good stuff. So if you want to basically just tell everybody a little bit about yourself and sort of what your company does and so on and so forth, that would be absolutely amazing.
Absolutely. Yeah, so I'm a mortgage broker. My job essentially is to link potential buyers to mortgage lenders to make sure that they're getting the best deal for their given circumstances. I originally started out in property, similar to these guys, working in agency. So when I left university, I kind of fell into an agency job without really much planning. I did that for a few years, ended up working out in Hong Kong, selling real estate to investors over there.
That must be quite interesting, sort of doing that as well then.
It was, yeah. You get to see another side of things, some big money that kind of rolls around there. So yeah, it was quite insightful. So I did that for a few years. Came back to the UK and decided that I wanted to get into mortgages. So I studied for my CMAP, which is the Certificate of Mortgage Advice and Practice, to allow me to give mortgage advice, basically. I worked for a couple of in-house mortgage brokers, one for Foxtons, which is a large agency in London, and another for Savills. So I've worked with some pretty big agencies as their kind of in-house broker. And then at the start of this year, I started my own business. Again, mortgage broking. Basically decided that I wanted to branch out, do things my own way, have a bit more control about the way things work. I tend to find that the bigger firms are quite sort of interested in volume of business, and so they kind of churn through cases and don't really give much care and attention to the clients. So starting my own business, got a bit more time on my hands, so I can dedicate a bit more to each person and make sure everyone's happy and keep everyone on side.
Brilliant. And how is it starting up your own business? Is it quite sort of intense at the moment?
It's fairly intense. It was interesting timing. So officially it was March that the company launched, and then we had lockdown and the property market kind of ground to a halt. So that was a little bit disappointing, but no, we were using our kind of remortgage pipeline to carry us through. So people don't necessarily need to be buying a property to take advice from a mortgage broker. So kind of going through our back book, existing clients, kind of speaking to people, making sure they're in the best possible position. And then again, since lockdown has eased and people have started viewing properties, it seems to have gone bananas. There's a lot of activity.
I was going to say it's sort of gone up a bit at the moment, hasn't it?
Massively. So my typical week is I do kind of 2 or 3 applications. In the last 2 weeks, I've done 16. So it's really stepped up. Most of those first-time buyers
sort of rocking up at the moment then.
Oh yeah, I think it's a combination of things. I think everyone was kind of sat on their hands waiting for Brexit to be done and dusted till they knew what was going on with the property market, and people have been sat waiting for 3 years. Decided this kind of year was the year. Then lockdown happened.
I was going to say, so a very interesting sort of conversation that I do want to quickly cover as well is that with sort of Brexit, what have you sort of had any effects yet of sort of the Brexit on the mortgage sort of like lending kind of sort of side of things or not?
No, I don't think so. So I mean, all the policy around sort of lending has remained the same. So the FCA and the PRA have not changed any sort of policy as a result of Brexit. So the lenders are pretty much in the same position. Until recently they were fairly basically the demand for mortgages wasn't as high as they would have liked. They weren't hitting their lending targets. So yeah, I think they're quite keen to get things moving again as much as anyone else.
Good stuff. I'm glad. So right, so also I'm going to pass over to Matteo as well. Matteo, how are we doing anyway, sir?
Good. Hello, everyone.
Good stuff. Give it. I'll pass it over to you, and let everybody know sort of what you're doing at the moment and what you're about.
Sure. My name is Matteo Donna. I've been working in properties for roughly 15 years. I started my career in Italy, in Milan, where I'm from. I worked there actually, first of all, as a building engineer. I didn't like it very much. I switched to sales very quickly. I became a property consultant there. Then I moved to London. I worked for many corporates and independent estate agents within the capital. And last year, we opened our own business, Alex and Matteo Estate Agents.
Hey.
And, with Alex here on your left.
Yeah, no, I think you know what, honestly, it was probably one of the most scariest things I've ever done, but one of the most exciting things I've ever done at the same time.
Yeah.
You sort of like got the exact same kind of feeling with that one, David, as well.
Yeah, exactly.
Yeah, pretty much. Slightly daunting, but very rewarding.
Yeah, it's good that we can share the same emotion.
There you go. Exactly, buddy. Exactly. But yeah, so thank you very much, both of you, to obviously come on today. And I really hope it's going to be a very big sort of interest for a lot of people out there. So what I've actually done is I've actually sort of reached out to our sort of properties or insight group on Facebook and all the social media portals out there at the moment, and they do actually have quite a few questions to sort of run through today. Hopefully we'll be able to get through most of them, but David, I think I'm going to pass the baton over to you on this one, sir, as we did actually have one about obviously the COVID-19. So with obviously the issue with the market with the COVID-19 at the moment, what's the situation with sort of lending at the moment? I heard that obviously they're a little bit more sort of with the criteria of the banks. They're a little bit tight at the moment. How does it sort of work with that?
Yeah, so there's been a number of restrictions that have come in. First and foremost is the what they call the loan to value. So the percentage of the property price that you can borrow. So most lenders kind of pre-COVID would go up to 95%, which meant you as a buyer needed a 10 or a 5% deposit in order to get the balance on the mortgage. When COVID came along, obviously lenders have a lot of concern about what's going to happen to house prices as a result of the impact on the economy. So they reduced their maximum loan to values. A lot of them came down as low as kind of 60% in the initial days. But over time, have gradually gone back. So they're kind of increasing their loan to values all the time. However, they're not quite at sort of pre-COVID levels. So most lenders at the moment will only go up to 85%, which means you as a buyer or remortgager need 15% deposit. The couple of lenders that are operating in the 10% deposit space are in very high demand. So at present, it's the likes of HSBC. Nationwide came back last week, and Bank of Ireland. HSBC, for example, just show you how sort of busy they are. They're releasing kind of a tranche of 10% products every morning at 8 a.m. and by 20 past, they're gone.
Jesus Christ, they're going very quickly at the moment, then.
Yeah, it's pretty crazy. As a broker, I've been on the sort of system at 8 a.m. every morning trying to apply for clients. The last one that managed to get submitted took me 8 days in a row of trying. So hopefully Nationwide coming back into the market will kind of ease the pressure on HSBC. But I really would like to see a bit more support from some other lenders coming back into that space and kind of taking some of the.
Would you say that HSBC is sort of one of the biggest ones at the moment then?
Well, they're of the lenders that are offering 90% loans. Their rates are the best in the market. So obviously there's high demand for them. There's a couple of others, as I said, like Nationwide and Bank of Ireland, but they're being a bit more restrictive on criteria. So things, let's say, for example, Nationwide, their maximum term on a standard mortgage is 40 years. So as a first-time buyer, you might want to take a longer term to keep the payments down to a comfortable level.
Cool.
Whereas on a 9% loan at the moment, they're saying the maximum term can be 25 years. So it's kind of squeezing affordability. Essentially, what they want to do is to ensure that the people they're giving those loans to, it's affordable, and it's affordable over a shorter term. Other lenders, for example, like Bank of Ireland, their usual income multiple is 4.5 times. So they'll give you 4.5 times your combined salaries as a maximum loan. On the 90% products, that's cut down to 4.25. So again, there's restrictions that would apply to those higher loan-to-value mortgages, and that's just for the sort of the loan-to-value restrictions across the market. We've seen quite a few other changes as a result of COVID. Lenders that would normally have used variable income, such as overtime, bonus, commissions, have cut the amount of that they'll use. In some cases,
yeah. So with this one as well. So funny enough, that's actually coming on to my sort of next question as well. With obviously COVID-19 at the moment, it's causing a lot of issues with a lot of people being on furlough and being made redundant and so on and so forth. With the lending, do they take that commission into sort of structure? Do they take it into when you're wanting to get some money out of the banks with the lending, or what do they do with the furlough at this moment in time? Do they take it from that, or do they take it from your 100% of your salary as well?
It depends on the lender. Each has different policy. In general, though, most will use whatever you're receiving at present. So if you're currently furloughed, they will take your furlough income. So whether that's just the furlough amount from the government, or whether you're being topped up by your employer. If you're being topped up, they can use the combined furlough plus the top up. Whereas if it's just your furlough amount, they'll only go on what you're receiving currently, rather than what your pre-COVID salary was. There's also kind of further checks.
Sorry to sort of interrupt, David. Is there any sort of lenders out there that would do the full amount or not?
No, so every lender going would basically judge the loan on what you're receiving at present. So if you're furloughed, it's going to be reduced. Most of them are quite good though. Once you do go back to work, they will use the new returning to work income straight away. They might ask a few more questions just to confirm that you are back to work. It is going to be full time. So it might just be a letter from the employer just to confirm something like that.
Brilliant. Not a problem at all. So yeah, I think that's all covered most of what I need to know regarding sort of lending and also the commission structure at this moment in time. There is a couple more sort of questions on this one. I do want to pass the baton on to Matteo as well. Matteo, so another one actually that just came through was about stamp duty. Now, this one was another one that someone actually did ask us, and it was, what about the situation about the stamp duty relief at this moment in time? What are your sort of thoughts at this on this one?
Yeah, was a great news, the stamp duty relief. As many of you knows, from beginning of July, the stamp duty is going to be reduced, and basically first-time buyers and second-time buyers and investors as well will save up to £15,000 on their purchase if they buy before the end of March next year. That obviously, of course, boosted the market a lot. We are seeing a lot of people buying at the moment. In fact, I actually have a question for David, because I met a mortgage valuer, surveyor, sorry, last week. He said that he's been very, very busy lately. He said that most people are using HSBC at the moment with a 10% deposit, right? How long are we talking about? I mean, if I send an application to HSBC today, how long would I need to wait to get the valuer, the surveyor out? Because I remember when I bought my property, it took less than 1 week. I submitted the application with, I think it is actually, it was nationwide. The week after, we had already the valuation booked. How long will it take for HSBC to book a mortgage valuation, now that they are going to be very busy?
So it depends on the area in which you're buying. So once the application has been received by HSBC, they will instruct one of their valuer partners. That instruction will go out to a local surveyor. So it kind of depends. If you're buying an area that's extremely popular, and that surveyor is a bit busier, then it's likely to take a bit longer. Generally, I'd expect to see the valuation booked within a day or two, and to have been carried out within, I'd say, a week is fairly typical, but no more than 2 weeks wait, I would have thought.
So it's normally quite quick on the process then. Yeah,
exactly. So once you've actually managed to get an application with HSBC, again, that's the difficulty, is actually managing to submit it. But once it's in, they're very swift. They've got a good system for kind of reviewing, getting valuations done sort of straight off the bat. So some banks will kind of wait until they've done all their internal checks. They've got their underwriting approved before they'll instruct the surveyor. Whereas HSBC or one of those lenders will do it at the point of application. So as soon as that's received, they'll instruct the surveyor. So it can be pretty quick.
Oh, very good.
Fantastic. So yeah, that's obviously something that I'm glad Matteo actually asked that one, because to be perfectly honest, I know for a fact I was thinking about this as well. So yeah, it's a very interesting sort of concept with sort of the time lapse with obviously post and pre sort of quarantine levels with obviously COVID-19 and so on and so forth. So and I think realistically at the moment in time it has sort of delayed things a little bit as well. But I did actually have another one for David. So another question for you, sir. With this one, so I hear that obviously it is positive for mortgages at the moment as well, with obviously COVID-19. There is some positivity out there, just to let everybody know. And they are asking about sort of desktop valuation and also online verification ideas. Could you let the listeners know a little bit more sort of about this and what it's all about as well?
Yeah, certainly. So I suppose the positive of COVID is that kind of people are realizing that you can work from home. There are ways of doing things. So, for example, I'm buying a place at the moment. My solicitor would normally require me to go into the office with my ID to kind of present it to kind of give him the ability to verify it and make sure that it's me. Whereas we just did a Zoom call. I held up my passport. He checked it. Looked at my face and said, "Yep, that's you." I sent him a scanned copy, and that was sufficient for him to verify my ID.
So that's absolutely fine to do then. They can genuinely just do it with a Zoom call and just say, right, here's my passport, here's my face, here it is, and that's absolutely fine then.
Yeah, so I think it kind of depends on the solicitor. If they're willing to do it, then that's fine. But yes, it is possible. So things like that are obviously an improvement and kind of save everyone a bit of hassle. Other things, as we're talking about sort of valuations, lenders for a while have been doing sort of automated valuations, whereby they will receive the application, and they'll look at the property address, check the postcode, and kind of provide a valuation on that address sort of automatically. It tends to only happen when your deposit is much larger. So if you're sort of you're borrowing less, it's kind of less risky for the bank, so they're more willing to rely on automated valuations. So those are obviously being used more often now, and also desktop valuations. So rather than a surveyor going to visit the property in person, they can look at the details online. They can compare that to properties that were sold in the area recently, and will base their valuation on that. Again, it's more likely if the loan to value is lower, they're more likely to do a desktop valuation. But it's all these kind of things that have sort of sped up the process as it's kind of a necessity at the moment. But you're going to hope that it continues into the future.
Is it sort of happening a lot more at the moment with desktop valuations, or?
Yeah, absolutely. So during lockdown, when surveyors weren't actually able to go out to visit properties, there was a bit of a backlog on surveys. They started clearing through those using a few more sort of desktop valuations. It was actually within a couple of weeks, most lenders had cleared their backlog of surveys. So it's been kind of running fairly smoothly and as normal for the last few weeks at least, I'd say.
Fantastic. No, I'm genuinely so glad. I feel, honestly, with sort of COVID-19, don't get me wrong, it's something that everyone needs to do, and quarantining is such a sort of crucial element to the whole sort of like getting back to some kind of normality. But hearing a bit of an uprise in the market and hearing a bit of sort of like get-go, it's actually really nice to sort of hear. because you're not getting it at sort of obviously post quarantine or pre quarantine anyway. So yeah, let's hope it sort of keeps on going with this really. And no, it's very interesting to sort of hear sort of your concept on regards to sort of what you think of sort of the market at the moment, and so what we think of sort of where it's going to be going to, which actually leads us on to the next question for sort of Matteo and also for you as well. And I'll start with Matteo on this one. It's a bit of a broad one, but what do you think the future is with sort of obviously the market at the moment, and where things are going to be going with obviously the stamp duty and so on and so forth?
Yeah, I mean, as David was saying, the COVID-19 obviously disrupted a bit the market, but in the meantime, we realized that we can cut corners. We can work from home. We can find documents online. We can get prescription online. We don't need to go to the GP anymore. I remember I was fighting on the phone, saying, "I need a prescription. Why do I need to come all the time to the clinic?" Now, with the COVID-19, you can get a prescription over the phone. You can sign a contract over DocuSign. Alex and I started to do that last year. I mean, it doesn't make sense that a tenant needs to come to my office to sign the contract when everything can be done online. So we are saving a lot of paper. So there are positive things with this COVID-19. We are not printing. In the last 2 weeks, I print 6 pages for a sales contract for an elderly couple that they don't use the computer. I think that is great, and I hope the future will take us even further. I mean, I think cutting corners is very important. Lot of companies are trying to cut. The problem is that a lot of companies are trying to cut as well in customer service. So it's very important to cut corners in terms of signing document, verifying the IDs. Again, as David was saying, now the government gave the green light on verifying the ID.
Sorry, Matteo, just to interrupt on this one as well. Funny you say that. I think realistically, out of genuinely a year of us being open, I'd probably say that we've only printed off around about 6 to 12 pages. Yes. Most of it is now basically all online. And I think this is going to be the new normality for us as an agency, and also for mortgage advisors as well out there. And obviously, like you, David, I think there's so many more options that people can go towards with doing it all over Zoom, like you said, or over, like you said, Matteo, with DocuSign, and there's so many other different ways of doing it. And I think that's such a crucial element to the whole sort of piece of everyone sort of staying at home and then not being sort of going to do face-to-face meetings. So yeah, I completely agree with you, Matteo. I think that's going to be the future, and like you said, David, I think that's going to be something of sort of the future as well for you. But yeah, with sort of going back right from the start, David, you said that you're obviously seeing a big increase in lending at the moment, and obviously sort of everything at the moment. So, do you think that the mortgage market is going to be sort of picking up quite a bit now?
I would think so. It's very hard to predict. I think there's a lot of sort of pent up demand, I suppose, from people that haven't been able to move in the last few months. And then, as I said, sort of Brexit before that, when everyone was kind of sort of sitting and waiting. I think my experience with sort of property is probably similar to yours, that everything is very sentiment driven. If people expect prices to go down, no one buys anything, and prices do go down. At the same time, if we've got a limited number of lenders offering 90% mortgages because they're worried that house prices are going to come down, they're limiting the number of first-time buyers out there that can buy. And guess what? Demand will fall, and prices might well come down. So it's all kind of sentiment driven. I expect things like the stamp duty holiday will help. That's obviously potentially up to 15,000 people have got now that they didn't previously. And again, that's it might well be that that's kind of more someone's positive feeling about not paying as much tax, it might be that they could have done it anyway, but just the feeling of getting a deal is always...
Put it like this, if anyone can sort of like get away from tax, I think that's such a great thing to do, isn't it, really?
Yeah, absolutely. Everyone appreciates that.
Exactly.
But yeah, I think again, I really got an interesting article saying that it'll all be quite sort of specific to location, and that the biggest winners are going to be London and the southeast, where property prices are higher, where the saving is larger. Because obviously prior to this, if you were a first-time buyer, you didn't pay stamp duty on the first 300 anyway. So if you're looking in areas where that kind of cap was sufficient, then it's probably not make a huge amount of difference. Being in the London market that we are, it's obviously going to help us, but around the rest of the country, I'm not so sure.
Yeah, this is the concern. Obviously with the London market, like you said, it's fluctuating a hell of a lot, and that's just the London market, right? So hopefully it does help everybody else, and hopefully it does help the London market as well. So it should be a win-win for everyone. Cross fingers, really. But also, I have one last question from one last person as well, as we got a bit more minutes to sort of crack on with. So with this one, they were talking about high-rise, so high-rise buildings, and obviously the cladding with the high-rise buildings. With the banks, with the criteria with the banks, what's the situation on the lending with high-rise buildings at this moment in time, David?
Yeah, so it is a little bit tricky. Anything with cladding, we send a sort of a surveyor to value the property. If it's got cladding and they don't have evidence that it's up to the current safety regulations, then they will put a zero valuation on the property. So they won't let you borrow against a property unless they have confirmation that the cladding used is up to standard. So it's a bit tricky because a lot of stuff that was built maybe a few years ago that was potentially up to standard at the time, now they've kind of retrospectively put slightly higher standards on things that don't meet them. You get a lot of people that are kind of stuck owning a property that can't sell and can't remortgage until this certificate is produced. It's quite often, well, there's a few different representatives from different agencies that are qualified to sign them off. But unless that's done, you simply can't take out a mortgage on those properties.
And are they? Sorry, David. Just regarding sort of the cladding as well. Are they very, very tight on this as well? That they need to see the certificates and everything else.
Absolutely. Yeah, it's a very hot topic. Everything is. It needs to be there before they'll offer the mortgage. So I've got one at the moment. It was a new build, about 2 years old. We sent the surveyor around. They said, "Oh, it's got cladding." We've got a zero valuation on it. I've sent back in the certificate that kind of proves that the cladding's up to standard, and they've reversed it. So it's it's fairly straightforward when that documentation is in hand. But I think the tricky thing is when you've got a property that's maybe a couple of years old, it's whose responsibility is it if that cladding needs changing? If it's not up to standard, is it the owner's responsibility? Do the service charges need to increase to cover the cost? Exactly. Is it the developer's responsibility? They're saying, well, when we built it, it was up to code, and now it's not. Is it the government's responsibility because they changed the rules? It's a very thorny issue.
It sounds it. It really, really does. And I'm glad that someone did actually bring this one up as well, because there's a lot of sort of high-rise buildings out there, and this is it. A lot of people need to understand what the situation is with these things as well. I do remember, obviously, there's a couple of high-rises that I've dealt with in the past, and it was a lot more sort of lucrative back then because obviously it was previous to Grenfell Tower, but now I'm so glad that they've now sort of like put these sort of implementations into place because it needed it. It really did, because there was a lot of issues with these sort of cladding, with these high-rise buildings as well. But also, Matteo, with this one, do you have anything to sort of chime in on this one as well?
Yeah, I was going to say, I was talking with one of our clients last week, and he was asking me, Matteo, is the cladding issue and this certificate, do we need the certificate even if it is cladding in a low-rise building? Because he was talking about 18 meters high. Can you please clarify on that? Do you know what is the rule. And also another guy was asking, I don't have cladding, but the bank is asking for a certificate, even if there is no cladding. So is it the case that they need a certificate to say, no, there is no cladding, or what's the situation?
It depends. So if you've got a surveyor that goes around to a new build and it's quite clearly brick built, they should be able to sign it off themselves. If there's any kind of question about whether certain components of the building might be made of combustible material, then it's obviously their responsibility to check it out and make sure it's up to standard. So yeah, I would expect there'll be to be a few cases where you think, well, this one's quite clearly shouldn't be an issue, but they will ask for the documentation anyway. Kind of belt and braces from them, I suppose. They want to make sure that absolutely everything they're lending on is suitable security. Ultimately, if you can't stop, if you stop paying your mortgage and they need to sell that property to get the money back, they want to know that there's no restrictions to it. So it's it's part of their interest as well, it being a kind of safety issue. It's business.
Yeah, exactly. So the obviously the issue is that they need to be very, very thorough with everything, right? So which is fair enough. I guess that's something that they need to make sure of prior to obviously them sort of going through everything else and getting all the lending sorted. But look, guys, we are now out of time, but thank you so much, both of you, to obviously come on, and very, very special thank you to David Walsh as well. Guys, I really, really hope you have a great rest of the week and also weekend as well. And thank you very much for everyone to listen in on this one. If you've got any other questions as well for David or Matteo or myself, do give us a comment down below and we'll be more than happy to help. But guys, hope you have a great time and see everyone next week. Cheers, guys. See you later.